A Donald Trump win in the U.S. presidential election spurs global markets. The Sensex reclaims 80,000 and the Nifty gains over 1%. Mid-cap index surges over 2% in trade.
From stocks to crypto, the Trump trade erupts across markets. Stock markets rise across Europe as well as the U.S. The Bitcoin touches $75,000, hitting a record high. Crude oil prices ease in trade.
Back home, IT stocks surged the most. The Nifty IT index up 4%. Oil and gas, along with real estate stocks, also gained.
Hello and welcome to Markets Forward, your go-to show where we aim to get you up to speed with regard to today's trading action and set you up for tomorrow as well. I'm Nigel and joining me as always is Surbhi. Hey Surbhi, what a session. Everyone was talking about that 200 DMA. The Nifty is likely to go down to around the 23,300 odd mark. The bulls say no ways. We are taking this market higher. At least that's what we have seen for the last couple of trading sessions. Coming back with a bang.
Oh, and how? And I think, we talk about pollsters and exit poll and this poll and that poll. I think the market just got it so spot on as far as the US election goes, right? We saw that surge building up. India started that move. Then we saw that move overnight on Wall Street as well. And it just continued today. And as the numbers started trickling in, and just to quickly make the point on the global market first, and then we'll talk about India, as the numbers started trickling in, the Trump trade had already begun. Because while we started our move, US futures were higher. They were up about 400, 500 points. By the time it became even more clear that, it was Mr. Donald Trump coming to the White House, Dow futures were up almost 1,000 points.
Indeed.
But not just that, I thought the move today on the dollar and the bonds was also very, very interesting because the dollar was surging higher and bond yields were surging higher. That means bond prices were falling. And why is that? Because I think the market's a little worried about inflation and about higher deficits because there will probably be a fair amount of spending going forward. But like you said, what a day. Asset classes around the world, really, giving some very, very sharp reactions.
Well, what an impact the man has had, right?
Oh, yes.
I mean, every asset class rallied. There wasn't a single asset class that didn't rally in today's trading session. Everything did well, barring crude, obviously, because he believes that the US has enough. They're going to pump, they're going to drill more. And, that's why, in fact, that's one macro tailwind, actually, should be for India. Because Trump is talking about, increasing the production, keeping a lid on crude oil prices, which is a macro tailwind from an India market perspective. The bulls, they welcome Trump as the US president. You had the yields that moved up. You had the dollar index was stronger as well. But for today, the bulls, India bulls said, we are ignoring that factor because they're expecting that to realign itself and come back to normalcy. A couple of stocks that were in focus today, BEL and Adani Ports, both of them the top gainers on the Nifty itself. But their weightage on the Nifty is absolutely minuscule, right? Those are the top gainers. Both of them put it together, they won't be more than 2%, 2.5% on the index. What did well then? Big tech, that was the big driver today. Rallied close to around 4% in today's trading session. The Nifty was up close to around 1%, but you had tech that did very, very well. And Reliance Industries, it's gone through a few months of underperformance. Now it's got the 20 DMA, which is in kissing distance. It's 2% away from its 20 DMA. And that holds the key for me. Because this big heavyweight, if you pull up a last 6-month chart, you'll see that it's done absolutely nothing. In fact, it's been a big drag. And today it was up 1.4%. You're talking about, the large weight of 9-10% on the index that performed finely. The Nifty Bank, well, that took a bit of a backseat today. It paused in trade. It had a steady run yesterday, but that was an underperformer, while mid and small cap indices. Yesterday, they were, more or less quietish. Today, both those two indices went home with gains of around 2%. Stocks are up 5, 10, or even more than that. But both these two indices do well. So your portfolio will be feeling very, very good because of today and yesterday's rally.
Oh, yes, absolutely. I mean, what a day it indeed turned out to be. And then we had, of course, a lot of the congratulatory messages that started pouring in for Mr. Donald Trump, including from Prime Minister Modi. Now, what does a Trump win really mean for global markets and in specific the Indian market? Is Trump good for Indian equities? That is the question we put to market veteran and a member of the Bombay Stock Exchange, Mr. Ramesh Damani. And Mr. Damani gave a sort of very detailed, nuanced view. He did say that we must remember that this time Mr. Donald Trump is returning with almost absolute power. So we need to see how foreign policy and how economic policy really plays out. And then we got Mr. Damani's view on the recent consolidation that the Indian market has been in. He is expecting this consolidation patch to actually continue for the next couple of months. Let's hear out this view. It was a very, very good conversation. And our colleague Prashant started off by asking Mr. Damani about the implications of Trump's historic win.
Thank you, Prashant. I think it caught a lot of people by surprise. It's a clean sweep. I think he's got the White House, the Senate, the Congress. In fact, even the popular mandate, the popular vote has gone in Trump's favor, which hasn't happened many times for Republicans in the past. So I have said this before. You've heard of the Academy Award-winning film, The Last Emperor. He's going to be the first emperor of America. I think he'll be one of those unchecked powers in America. But before that, I would like to congratulate the American people. I'd like to congratulate Donald Trump for one of the historic elections and the peaceful transfer of power that we're witnessing. It's actually a majestic sight to see this transfer of democracy and how people vote. Absolutely astounding, remarkable, and in my opinion, one of the great comebacks in political history. I can only think of two comparable comebacks. Richard Nixon in 1960 lost the presidency, lost the governorship. 6 years later, he was sworn in as the next president of America. And Winston Churchill, 20 to 40, was in the wilderness. Then he led the Allies and became the greatest statesman of the 20th century. So two great political comebacks. This is probably the third.
Mr. Damani, absolutely, and that's so well put, as always. In terms of themes that our viewers should focus on, from a market perspective, what is your sense? I mentioned that drill, baby, drill, more American oil production. He's always said, well, we've got enough of this stuff. We don't need to import it, and we should do more. Of course, people who are worried about climate change may sort of differ with him in that sense. But he is all for increasing American oil production. Is that kind of the big thing for the rest of the world to begin with? Lower oil prices? What's your sense?
I'm not sure the U.S. president controls oil prices. There are a lot of factors that control it. As such, we expect oil prices to be subdued because we are transitioning to green energy and electricity and so many other things. So that's a different question. But I think personally, if you ask me, Prashant, the market is having a honeymoon today as well. It should. We've had a honeymoon in the Sensex. Dow will open up with a huge gap, as you're pointing out. So every new president is accorded a honeymoon. Plus the fact that there will be no resistance to the plans he does means there's some buoyancy in the market. But if you look closely, I think the world that we lived in from 1950s after World War II to today rested on the backs of the U.S. The U.S. opening up its markets, the U.S. Encouraging world trade, U.S. encouraging immigration, U.S. giving most favored nation status to a lot of emerging market countries so they come up to speed. That is about to change. So I think, though, in my opinion, the economic axis of the world changed today. And I think we'll have to sit back and maybe with more reflective time, understand what the implications of a second Trump presidency means. I think they are going to be far-reaching, and the world as we know it, the economic world as we know it, will have changed.
Mr. Damani, sir, good afternoon. It's so good to have that perspective from you this afternoon on this big, big day. And I now want to sort of veer towards India and what this Trump victory means for us. Now, we already know about the great personal relationship between Mr. Modi and Mr. Donald Trump, and we've already seen the exchange on X in terms of the congratulations, right? And then there's the China angle. Now, purely from a market perspective, given the history, given the tariff tilt, so to speak, and the expectations, is Donald Trump at the White House going to be positive from an Indian equity perspective?
There's a well-advertised bonhomie between Modi and Trump, which I understand, but I think international relationships are much more complex than getting along with each other. Let's just take two issues that, first, all of Indian goods will probably face a tariff barrier. I think Trump has already signaled that during his election campaign, that India is taking advantage of the lax U.S. laws and sending stuff to America, and he'll impose tariffs. So that is not good news for India. Secondly, we'll curb immigration. A lot of Indian technology depends on legal immigration to America, which may stop over a period of time. And the thing you have to remember is that now Trump is going to be a lame duck president. He doesn't have to go back for an election ever again. But he's also an unchecked power right now, because everyone, after this extraordinary comeback, everyone will bow to his wishes, including a Republican Congress. So he could say, for example, if India doesn't support me in Afghanistan or India doesn't support me elsewhere, I will do so-and-so to India, and there will be no pushback from Congress. You recall in the 1950s and 1960s, when India was the head of the non-aligned movement, did not align itself with America, But American aid in PL 480 and other terms continued on in India. That did not stop Indian aid coming, American aid coming to India. So this is a whole new ballgame. I think, the victory, and such a sweeping victory, has been such a shock to the economic system that it will take us a while to absorb it. But I think the honeymoon perhaps will be good for the next few days. But after that, we need a hard, realistic check as to what the world and what India will look like in its place in the world over the next few weeks.
Mr. Damani, what I gather from you, and correct me if I'm wrong, what you're saying is you're tilting towards that. You're not saying it. You're saying it's good for US. But for the rest of the world, you're not very sure how this is really going to pan out, especially for emerging markets. Am I paraphrasing that correctly?
Yeah, I think what will happen is that if you support Trump's policies, and sometimes in foreign policy, India and America have very different goals. But if you follow the policy, Trump will be a friend of yours. But if you try and steer independent policy, you may find a vicious backlash. I think what would benefit, of course, at least in the first few years, is what we call the China +1 policy. I think this will encourage US manufacturers to seek sourcing, supply chain, manufacturing bases in India. So in that limited sense, it will help India. But I'm not sure how increasing tariffs or lowering the pie for the global trade or lowering immigration would help the world. I'm not sure about that yet. And I think, clearly, if Ukraine is given up, or if Trump does not want to support Taiwan, if China annexes it, I think that will be bad consequences of the world. I think the institutions that we relied on in the world, the IMF, the NATO, will all be under threat under a Trump presidency. So while we enjoy the honeymoon right now, I would be a bit more circumspect as I study the policies that a new Trump administration might follow.
That's so beautifully put, right? It is unprecedented and perhaps unchecked power that we're dealing with. And it could go either way. That in many cases it does. It's like a double-edged sword, perhaps. That's the point Mr. Damani seems to be making.
Unchecked power is what Mr. Damani has said twice. But sir, what according to you is driving this big IT rally that we're saying? Because in the first Trump administration, we did see tighter controls on immigration, and you alluded to it as well. So apart from the honeymoon angle, what else explains this 4% pop at the, on the index level for tech?
I'm not sure, but I think even a basic understanding of technology will make you understand that if you want your serious projects done, you have to come to India because it offers the software, the expertise, and the large-scale experience that your company might require. So I think that business will continue to do well, and ultimately, whether it's Trumponomics or whether it's America, you have to bow to economic reality of life. If you want a project done, you have to get it done in Hyderabad or Bangalore, any of our software centers. So I think that generally will be good for India. And I don't expect to see a major downfall in the technology spend space from America, because it is quite critical for America to remain ahead of the world. And if they want to remain ahead of the world in software, they almost have to come to India.
And do you see any realignment that emerging market fund managers would do in their pecking order? There was a tactical lift to the exposure to Chinese equities about a month and a half back. Do you see, if you were an emerging market fund manager, what changes would you make till we get more clarity on the policies?
I would look for China +1 policies, and I'd look for people who are firmly in the camp of America, like Israel, for example, under Netanyahu, or other emerging markets that are firmly in the camp for America. I think this is going to be, America is a very tolerant nation. It kind of had a white tent. You could have a disagreement and still do trade and business with America. I think that will stop, and I think that is something that analysts have not figured out yet. That, Trump has a long memory, and the nice will be out if you oppose American foreign policy, say in the Middle East or say in Africa. So, I think that trade will be dictated by supporting U.S. policy. I think that's a change that emerging markets are not used to. They're used to living under a big tent with America, where you could have, disparate opinion. I think we need to give him time. I think he's going to be sworn in still 3 months away on January 20th. So there's a long window yet for it to be done. There will be enough time to study the policy. Meanwhile, India is prospering because of its own economic strength at the current time. I think that will continue. I think there's a correction going on in the market. But when that correction is over, I expect the market to resume, irrespective of what Trump does, at least in the short term. But in the long term, what U.S. does is profoundly impactful across the world, not only in emerging markets, not only in India, but also in the developed economies of Germany, Britain, so on and so forth. So America is the centerpiece of the world. The only caution I'd like to make is that what Trump has suggested, ma'am, is that he would do a lot of tax cuts. For example, if you make tips, he would make it tax-free, Social Security tax-free. So where is the money going to come from? Does it mean that the budget keeps growing, the deficit keeps growing in America? I mean, it's at $35 trillion now. I don't think there's much room to increase it. At some point, the bond vigilantes, whether it's a Republican or Democratic administration, will come on and force discipline to the government. And I think in this 4-year term of Trump, if there's unchecked spending under a Republican administration, the bond vigilantes will be out and will force discipline to the government. There may not be any checks and balances in terms of the legislative branch in America today, or even the judicial branch. But the bond vigilantes are also religion on their own, and they will make sure at some point they will ensure a discipline in the economic performance of the administration.
No, Mr. Damani, we were discussing exactly this in the morning when that massive move on the US 10-year yield started, right? I think the manner in which the bond market is reacting is clearly showing that the bond vigilantes are really active. So now that we know what's happening in terms of politics in the US, and we know that Mr. Trump, in all likelihood, will the policies will be more inflationary, deficits will probably go higher. Now, what about interest rate policy in the in the US Federal Reserve and around the world? Because that's a real complex piece as well that markets will have to grapple with. Will you expect the Fed to continue on its rate cutting path as it had guided with the change of regime in the White House?
You know, if it is not cut, if the Fed decides to cut it, I think they will fire the Fed chief and replace him with the new Fed chief. That is Trump's knee-jerk reaction to this problem, as we've seen in the past. So I'm not sure if he would be different at this point. He's clearly a votary of a cheaper dollar and lower interest rates happening. But unfortunately, they collide with sometimes with the budget deficit, which in my opinion is now getting to be unsustainable levels. It's more than GDP for the first time in American history. Now, he's often said that he will cut defense expenditures, wasteful defense expenditure, the Department of Education, try and bring this under control. So we really don't know at this time. I think we need to kind of sit back and see what he does. But I think this unbridled honeymoon that we are witnessing today will probably be a passing phase.
Hi, Mr. Damani. Good afternoon and good to see you. And Nigel on this side. You know, just before we wrap up, I wanted your view on how the commodity space will pan out. Because China is the big boss in there, right? They produce maximum of steel, maximum of aluminium. And we know in the last tenure, he put in those tariffs. So one school of thought is he can't do anything more out there. But, you know, how do you play these Indian metal companies? You know, will it be positive or will it still be some kind of uncertainty out there?
You know, I'm not really a metal analyst, so I will pass on that direct question. But what he has seemed to have suggested that he'll put a tariff from 20 to 60% on all goods coming into America, not necessarily goods, the complementary that India puts that tariffs or Argentina puts that tariffs. From what I understand, he'll put in all tariffs coming to America. His thought process being that the money raised through tariffs, which is of course a national sales tax, nothing other short of a national sales tax, but the money raised through it will mean that he can reduce the corporate tax rate. In fact, he sometimes wants to abolish the corporate tax rate in America. Now, there are twin sides to it. Of course, if you reduce corporate tax rate, it would unleash productivity, capital, employment, all these things. But there'll be a lot of inflation due to tariffs. So I'm not sure if that's a negotiating strategy that he's going to use or that's something that he's actually going to implement with, say, a few countries that he dislikes. You know, it's the ball's in the air as to what he's going to do at this point on tariffs in particular. But my feeling is that the last time he tried tariffs in the 1920s under McKinley presidency in America, it ended ultimately very badly in the Great Depression. I'm not sure most economists would agree with that policy at this time.
Mr. Damani, you know, you said the honeymoon. We are in a bit of a honeymoon phase, but that will pass as it always does. As you kind of, it's kind of tough today, especially because the results are out today, to separate, you know, the U.S. elections with what the market is doing. But in a day or two, it'll become old news. You know, with the near 7-8% drop that we've had from the highs, Mr. Damani, how are you liking market valuations, levels? Are you still a little cautious here?
Yeah, Prashant, great question. I think it seems to me that the market wants to spend some time in a time and price correction. I'm talking about India now, that we want to spend some time and price correction. So in effect, we've made the highs, I think, for the year. And I think it'll take 2-3 months for the market to consolidate and then go back towards the old highs. I feel that what we are witnessing is only a correction of bull market, not a reversal of the bull market. And part of the reason I'm telling you the screen looks much better in the last few days. Stocks have made new highs. The mid caps have again started performing. So the scared feeling that we had that maybe the market has topped out is probably unwarranted in India. I think the market is just moving sideways. Might spend 2 months, might spend 4 months moving sideways before it goes back and tests the old highs. And I think it's correct only because of some underperformance, some problem. Market has corrected, which is good. We want a market that, you know, retains healthy and retains a good sense of valuation. So having studied the market over the last few weeks very closely, I am sitting on a little bit of cash personally, but I'm very uncomfortable sitting on cash. I'm trying to look and invest back in the market, but you want to find the appropriate valuation to invest in. So while that game goes on, I feel the market will probably consolidate for the next few months.
But
just a few areas, Mr. Damani, which, again, sorry, I'm pushing you, and you don't have to talk about stocks or anything, but just 2 or 3 themes, right, which in my conversations, it came up. Pharma came up with, especially companies which have got manufacturing facilities in the US, not outside, because now, exporting in perhaps incrementally maybe a little tougher, but capacities in the US. So those are companies. I mentioned oil earlier. Somebody just messaged me saying, well, what happened with defense? And you know it better than anyone because you were you flagged it off the earliest. The gentleman points out what happened with defense perhaps is now going to happen in oil. Big re-rating moment. I don't know. I don't know if you have any thoughts. And so these are the kind of, people are just trying to work out what are the slightly medium to longer term implications. Any thoughts at all, Mr. Damani? You said you don't want to sit on cash. It's uncomfortable feeling. So, yeah, go on.
Yeah, I mean, we've all of us in the markets who came in the 80s, 90s have made our money because we remain invested and we rode out the volatility that came with India. In the last 25 years, you bookended between Y2K and the COVID pandemic. And at the same time, you decide to get too smart and get out of the market. I think you lost on some great money-making opportunities. So we basically understand we want to remain invested in the market. We want to ride out the volatility. I think there's a risk in not investing rather than in investing. But sometimes you sell some overpriced shares. You want to buy some other shares. And I think I'm in the transitory phase right now. Speaking particularly about the defense companies that you mentioned, I think in America, for example, I think defense industries will take a knock because I think he will stop the exports to Ukraine, which has made them work double time, extra time. And I think it will be more for domestic consumption rather than export consumption. I'm not sure, but I think defense will probably cool off in America. In India, I think if you look at some of the shares, I think they will probably come back. I think the earnings have been good. The order books are pretty visible. Some of the companies will probably do fine at this point, in my view. In terms of oil, I'm not sure how to play this. At this point, oil prices will remain under control. So you'll have to kind of think and see what will happen based on that. But, there is some terminal value to an oil business also.
So to conclude, Mr. Damani, you said that while the market may consolidate for the next 3-4 months, maybe we've made a high for the year, you don't seem to be finding any problem as such with the market. Is that right? Earnings, there's been some murmur about an earnings slowdown or maybe a lot of FPI selling continuing. Do you see any real concerns at this point in time? Or will this just be a consolidation to digest some heady valuations?
I think the latter. I think probably be the latter. I think, we've been watching it very carefully and, it's been a great run and the index has tripled in value and you feel that maybe it's peaking out. And there was some suggestion that it was peaking out. But then in a peak out situation, you don't have companies going back and making new highs. A lot of companies that I follow have reversed courses and made new highs. So, that kind of suggests that the market still has a lot of strength, a lot of money coming in. I think just, money, the foreigners sold. And again, I don't begrudge them. They have 800 billion of portfolio. They're selling 8 billion. No big deal, really. We should be able to absorb that. So I think the market has entered a consolidation phase. It might last a few more months, and I think that's fine. I'm not in the votary of camp that unless market makes a new high every month, it is not a bullish market. I don't belong to that camp.
Well, clear clarity coming in from the stalwart, Mr. Ramesh Damani. For the time being, though, we'll wrap up on this edition of Markets Forward. We'll be back with more news and updates. You stay with us.